go ahead and dive in. As pre-markets digest Bitcoin back above 44K, we turn to today's top story, which is BlackRock's Bitcoin ETF inflows climbed to fifth highest among all ETFs in 2024. Now, according to Eric Bauhaus on X, IBIT, just one of the Bitcoin ETFs, has taken in more than 99% of ETFs with nearly 3.2 billion of inflows this year. And IBIT has experienced the largest inflows of all Bitcoin ETFs. JJ, was anything less than failure? Was anything less than failure for BlackRock?
I think this is kind of what we expected, right? Like, somebody like BlackRock is jumping in the water. They're not going to let this thing totally flop. What we were looking at over the past couple of weeks is typically the chart patterns we were seeing would have played out bearishly, right? But there was always that caveat that there was this sideline money, and obviously BlackRock's reputation was at stake. They weren't going to let this thing just die immediately on release, apparently, and they've unleashed the big guns. So we've seen some pretty substantial spot buying. Coinbase spot premium returned yesterday, which is an extremely bullish signal. So yeah, I think it's
so it's all lights on Bitcoin right now, and it's all looking very bullish. I remember many moons ago on one of our shows a long time ago, you mentioned as soon as BlackRock was ready to hit the streets, they would have their sales team in force, and they'd be selling this thing to everybody and their grandmother. It looks like that's what's happening.
Yep, exactly that. Like, we kind of are seeing the benefits of passive flows now, right? Traditionally in Bitcoin, it was very limited market participants. We were all looking at the same charts, doing the same kind of analysis. And now you have this basically price insensitive flow where you just have a bunch of people like Saylor who are willing to buy it at whatever price, and they're just happy to have exposure. They're sitting on it for the course of longer term, right? They're not just buying this to flip it the second it goes above a certain price level. They're looking at a long-term perspective here. So extremely bullish.
Yeah, extremely bullish. I agree. All right, Benjamin, I want to bring you up here. We talked about the importance of infrastructure being built out for funds to start accumulating Bitcoin. Yesterday, Matt Haugen on X noted Fidelity's conservative all-in-one fund in Canada now has a 1 to 3% allocation of crypto. And just this morning, Eric Bauhaus announced that Gerber Kawasaki and RA added the IBIT ETF to the ETF GK. Now, it was just 0.12%, but still, it's notable. In your mind, do these stories hint an accelerated path to adoption of Bitcoin for their ETFs? Benjamin, you with us?
Yeah, thank you. There's certainly quite a lot of interest, and it really does look bullish when it comes to the flows that they've been seeing. And like JJ said, this should push up a lot of passive flow constantly happen. Might seem like low spot flows on our side, but on the base layer, something else is happening, which seems to be quite bullish.
Well, I guess we've talked several times on this show about the idea that it could take a year for these flows to kind of get set up. With some hints like this, do you think it's less than that? Is it only 6 months until we start to see the on-ramps really start to flood the market?
Could be short term as well. Could be that this FOMO is still continuing for a month or two, and then we have to see how in the halving month and later on how it plays out. I mean, like 3 weeks back, we were all worried about if GBTC will basically sell it out all and that entire flow goes to zero. So this is an evolving situation, so we have to go step by step. But overall, looks good.
Overall looks good. A little bit of caution from Benjamin. He doesn't want to get out over his skis. All right, JJ, I want to come back to you because we're talking about the Bitcoin ETF, but let's be real. There's another ETF that's on its way, and it's the ETH ETF. That decision's looming. We're expecting a decision by May 23rd, 2024, and that would be the final decision for the VanEck ETF. And for those who haven't really seen this yet, we've got 6 entities that have submitted applications. At least that's what I was able to get information from my news feeds. And we're expecting an approval. We've talked about that before on this show, given what we've seen in terms of the SEC losing the court cases that said you could have a futures ETF and not a spot ETF. The fact that these are out here, we expect for these to be approved, but it's still over 3 months out. So JJ, the question is the market showing signs that it's getting ready for an ETH spot ETF?
I think we're seeing signs of nibbling here for sure, especially in the options market. So
Hmm.
ETH had a nice run up over the past couple days. Let's take a look at the chart here. You see it was looking pretty beaten down towards the end of January, and that's had this nice recovery bounce. It's coming back towards the top end of its Bollinger Band here on the daily. And it's looking to break above that 2,500 resistance level, which is pretty pivotal. Additionally, we see that the ETH volatility index is starting to rise and actually outpace Bitcoin's implied volatility index. So we see right here, ETHE IBIT has a score of 48. Bitcoin's currently at a score of 47. They both got extremely beaten down throughout January post ETF announcement. But now it seems like it's kind of reached this level where the risk reward of buying long dated ETH volatility is there. So kind of the odds are in your favor if you're going to take a long-term directional view on ETH. You can do so pretty cheaply. We discussed that last week when we were looking at long-term ETH options, right? Those 2,800 calls dated for the end of December 2024. They were pretty cheap comparative to the size of the move ETH can make. And obviously we're not the smartest people in the room. Other people see this too, and they realize that's a potential mispricing there. So if we actually look at the ETH implied volatility term structure, we see it's starting to steepen. So this is basically the market's expectation of future volatility of ETH. And what we saw back in the end of 2023 into early 2024 is this really got overheated and it was actually inverted. So if you were to look at this chart in say October, or November through December, basically that whole time frame leading up to the ETF, it would have shown that this was rising into January and then it was falling off, right? And then basically that's the way the market played out, is we had a huge volatility event in January, didn't obviously reach these levels, but it got pretty overheated, sold off. You had option sellers step in, take advantage of that premium, sold it off, and now it's starting to rise again. And we see a significant rise here. So currently the February 11th expiry has an implied volatility level of 38. But then when we look out towards March, it jumps up to 44. So that's, 30% increase there. And it just keeps steadily rising. So what this is showing you is that people are taking longer dated bets on volatility into ETH currently. And I think this is a trend that's going to continue here, especially if it gains traction over 25,000 or so. We could really see some huge inflows starting to come to ETH as people try to front run the ETH ETF announcement. I think that's the Bitcoin ETF fractal. Basically what we saw play out with Bitcoin is what we should expect with ETH, is kind of a huge run up if this is 100% certainty, as we seem to think it is.
As we seem to imply. Okay, without getting into the actual specifics, how do you think a sophisticated trader is going to play this? Are they buying the ETHE? Are they looking to buy some of those options, or maybe they're hedging both of them? Kind of, how would you look at that?
There's so many ways to slice it right now. Like you can,
again, not getting into all the specifics, because we can get into that a little bit later. Just at a high level, at 100 foot level, what would you do? What do you think they're
high
looking
level? ETH is still trading at whatever, a 20% discount or so, possibly even more to spot. So that's basically free money. You can hedge that with perps. You can still buy that long dated option exposure for very cheap, because if we look at the implied volatility level, it's still very low, right? So this is telling you options volatility is still very cheap at these levels. So you can get that longer dated exposure for very small amounts compared to the size of a move ETH can make. If it goes to say 4,000 by the time this ETF goes live, if it goes live in June, that's a whole lot of profit that you would get if this were to rise back up to, say, it takes out the January highs, but could go even higher than that if the market starts to get really frothy. So there's a lot of opportunities in derivatives markets if you're looking to play this and take on some leverage as well. So I think savvy players are probably doing a mix of both, probably own some spot ETH and then kind of Texas hedging there a bit. And
Texas hedging, or some other state with a large border. Okay. So if you have questions, I'm going to give you two gifts today. 2 episodes ago, and it's in our videos. You can hear JJ and I believe it was Benjamin when you were here last. We were talking about different ways to play ETH. Go check that out, because that's going to give you some more detail about ways in which you can play this. Again, we're thinking this is a high probability play, but beyond that, we have an awesome opportunity coming up to get more into everything that JJ just outlined, which is how do you start to play options as we move further into the year and the volatility regimes change. In about an hour, I want to say about 45 minutes, we have the premiere of JJ's latest options video, which I believe is titled "Don't Trade Altcoins, Trade Options for Better Profit." I'm probably butchering that. I don't have it quite right in front of me, but it's going to go into all of this detail. And I think we have a clip that we can actually play if the producers can pull that up.
Fire it up.
Fire it up, baby.
It's almost here. The bull
Yep.
expansion moment that brings Bitcoin price and volatility screaming
These
back
are
to
a little
2021
slow.
levels. I'm not talking about the spot ETF launch.
These Bitcoin ETFs,
Bitcoin ETF.
the long
Really low. This is why Any today, luck? I'm going
Bear
to
with
teach you
us
how
here.
using
We're
options in
finally here, all right.
2024 will help you not only pace the gains of holding spot Bitcoin, but also help you more effectively manage your risk. So before you go ahead and deposit your last $500
I'm not hearing any audio.
into the latest
I'm gonna ask
meme
the
token
audience.
launch,
Audience, are there any,
and pray you can hit
any
1,000x
audio
before
out
rug
there?
pulls, hear me
For
out.
this options
And
teaser.
learn how the Bitcoin options market will offer you the greatest opportunity for outsized gains into and after the halving. Less risk, more gains. I know it sounds scary and intimidating if you've never traded options before, having to try and learn about things like Greek letters and all that other jargon that options nerds on Twitter love to freak out about. Well,
All right, so
but today I've got you covered. Just watch
yeah,
the video.
unfortunately,
I'm going to show you how
I
to
think the
perfectly
audience may
time
be
your
hearing the
options
audio.
entry.
We can't hear in the studio, so let's bring it back to the studio. But this is, in my opinion, JJ's best work on options, giving a really detailed view and a framework for how to look at the change in volatility, how to look at positions, and even how to hedge. So hats off to you, JJ. I think this video is out of this world. If you're interested in trading options, this is unmissable. You got to go check this video out. And again, it's premiering in about 45 minutes. And this is actually a great time to mention, if you're interested in starting to trade options, you should be looking at CoinCall. CoinCall is the place to trade options, perpetuals, and spot. They got a beautiful, elegant interface we've highlighted several times on this show, as well as all the assets that you're going to want to trade. And this is the time to start either doing the paper trades or to start putting your toe in to get better at these trades. So when these big fat swings come down the pipe, you are ready to swing just like JJ is. Because this, JJ, how long have you been trading options now?
Since 2017, full time since 2019. So
And how long
a
until it
lot
took
of
you to-
lessons learned.
I was
You
going to
gotta,
say,
you
how
know,
long until you really got comfortable trading options?
I mean, I'd still learn things every day. It's kind of a never-ending game. So that's what's exciting about it, is there's always more angles to look at the market from, more data to come across, and different ways to express your views. It's just truly never-ending. And
Okay.
it's fun to share this. I actually learn as I'm doing these videos
Yes.
as well, so it's good.
Well,
And in terms of this, like, it's a very
you're too
long-term
humble,
view.
JJ. You're too humble.
It's to give people a framework so you can understand how these things work long term, and you can spot these opportunities that will arise, especially if we're entering into a new bull market here, as it seems like we will be in the second half of 2024, especially after the halving. So it's to give you a framework to prepare for that, right? Like, you don't want to be FOMOing and buying these options premiums when they're at extremely high levels later in the year. If we get a massive breakout above 50K, you want to have a plan in place beforehand to properly strategically time your trades and ultimately extract as much profit from this market as you can, while using the least amount of leverage and obviously not getting liquidated. That's the number one thing. And that's a good advantage that options provide you. So it's just to give a window of insight there and hopefully level up your average trader, as I once was.
Absolutely. Well, that's the insights, and that's the way a sophisticated thinker is about to go about this market, especially as we head into 2024 and volatility starts to pick up. Okay, well, we're going to dive into actually doing a market update. For those who've joined us, welcome. Hit the like and subscribe button so you can be with us every Tuesday and Thursday as we share this information, do our market updates, do a headline review. And I think most importantly, if you have others that you think would enjoy this content, we know that they're out there. Be sure to share this wherever you can. If it's on X, if it's on Reddit, Discord, text messaging, Telegram, wherever you think you find people of like-minded, sophisticated traders who want to know where the market's going and how it's going to get there, this is the place to be. All right, let's move over to the actual market. Now, we typically go into spot, then we talk perpetuals, then we go into options. JJ, before today's session and in Discord last night, you said you were starting to sniff out some activity in the options market, which was looking really juicy from a Bitcoin perspective. You know, is this the kind of activity that's going to help catapult us up to 50K? I mean, today I think as we were going to recording, it looks like Bitcoin had just passed 45K, or was just touching on that door.
Yeah, it's been certainly looking bullish over the past few days, right? Like, we see this as we were discussing on Tuesday. Like, we had this long period of consolidation right around the 50-day moving average, right? And it kept going back and forth, but ultimately the trend was starting to turn up. And then we finally saw that big follow through yesterday. So we got that large spike above. We see it breaking out towards the upper end of its Bollinger Band here on the daily. And this is just, it's an extremely bullish thing. Like, we have all of these reasons to be bearish, but when the market is signaling otherwise, you can't fight it, right? You can't fight the flows, so to speak, in terms of these ETFs and the numbers they're doing. And it seems to be price insensitive. So they're not necessarily looking at the same things we're looking at. Like we were discussing before, these kind of market participants are different than what we've experienced historically with Bitcoin, right? So they're not looking at things like liquidation pools and whatnot. They just want exposure to it, and they're being sold it by BlackRock and whatnot. So it's a very powerful force that's come into the market. And if we look at Bitcoin options, it's very similar to ETH right now in terms of the term structure. So we see that's also in a rising slope here. Let's just pull it up. So it's the same thing, like it got extremely overheated into January, and then we saw that spike down. But now we see it increasing. And it's actually increasing at a faster rate than ETH. So we see the current volatility, implied volatility for February 11th is at 36. But then as we go out towards March, which is only a month away, again, another 30% or so increase, and this just keeps on rising. And I don't think this trend's going to stop. Like I think we're entering slowly, but we're entering into a high volatility environment. Not to say it's going to be off the charts volatility like we witnessed kind of at the peak of bull runs, but it's starting to hint at the fact that the options market's preparing itself for more volatility in the future, and that it's become very attractive to buy volatility at these levels.
So when you say buy volatility at these levels, what are these market makers and perhaps these other large trading desks? What are they doing? Are they buying leaps? Are they going into more short dated zero DTE options? Do you have any insight there?
They're not your average degen.
They're not the degens?
No. It seems like a mix. Like people are kind of going, it's very cheap to buy, like, or it was cheap to buy March calls a few weeks ago when IV was just extremely compressed. And now we've seen that rise up a bit. So it seems like people are starting to get some exposure, probably in both directions here, just looking to play it because we know Bitcoin, it's not going to stay in a stagnant state forever. Basically, we've been in the same range since that big leg up in December, early December, we shot up here. And now this just looks like a massive consolidation, right? And what follows consolidation is usually a big breakthrough. So whether that's continuation to the upside, maybe we take out those highs of January, make a move to 52K, or eventually we reverse back down and touch this 50-day moving or 200-day moving average. Volatility is coming, and I think you see the options market positioning for it now. When you take a look at that term structure chart, you just see that the market's expectation of volatility is rising, and that's a reflection of the bets being made in the options market.
So Benjamin, the market is preparing for more volatility. You've been on the show several times talking about a liquidity event, something that would actually be the last move down before we actually get the bull market up. Does this change your perspective?
I still think we get that. The difficulty is about timing it. So when we had the dump last month, all the way down to 38K, the expectation was that we get a dead cat bounce, and then it once again goes back down to mid 35 or a little lower, even to low 30s. But the way things are going right now, yeah, you really don't want to bet against it.
No.
So either wait for 48K or something like that to be broken and see where this heads up, or wait for a cool off and keep gambling. But it's we are really converting BTC now into an asset where be long until you're wrong.
Be long until you're wrong. Like. I'm gonna have that tattooed on my left thigh.
There's that old saying, ask the market about the market. So if you want to know what's going on in the market, look at the chart, right?
Well, we've got I want to bring in a comment here. We got Lenka K says, just looking if BTC sustains. No, I'm not trading much. Thank you, Lenka. There's another question in here from Nicholas Pinto. What y'all's insight on divergence chart showing whale accumulating BTC, ETH as well to an extent? We just went over the options market. We're expecting more volatility. You guys are saying be long until you're wrong. The question now is, how long is this rally going to go? I mean, it seems as though all of the bull catalysts are in play.
Yeah, it's kind of playing out. And here's that divergence chart. So we've been pointing this out the past couple of weeks, is that as price fell below to the 40,000 region, well, wallets just stepped in and started buying up all the supply. So basically starting at 41K down to below 40K and so on. They've just been persistent accumulation, and smaller wallets have been selling. So that just follow the smartest players in the space, right? Like these people have way more money than us. We've explained this a few times. This is literally smart money that you're tracking here. People that hold greater than 10,000 BTC see this level as value. And if they see it as value, you don't want to be the person selling to them over a longer time frame. And the charts confirm that sense. Like you had every reason in the world to be bearish here, and we were, and then price didn't follow through. So when the market stops reacting in the way it typically did, and as we've explained before, like the dynamic has changed. We have new participants in here. There's way more money, passive flows, etc. We shouldn't expect the patterns that played out before to continue exactly 100% in the same fashion, right? So you have to keep an open mind and just follow the trends. Like if we see this break back down, then yeah, be bearish. But until it does, there's no reason to fight it or try to be smarter than the market and try to enforce your view on things, because you'll get run over.
Well, let's talk a little bit about those changes in market dynamics. We oftentimes look at the perps, perpetuals, and futures as a way to drive activity within a range. But we've also talked about wondering how long that is going to be a legitimate or useful signal. And I'm looking at the open interest today. It's sitting at about 12.4 billion. So that's about consistent with what we reported last Tuesday. Now, interestingly, if I look at the long short ratio, just a couple of days ago, yeah, it looks as though we have more people starting to pile in from a short perspective. So is this signal? And now we have a question before you answer that, JJ. We had a question from the audience that says, do you think the potential liquidity Armageddon scenario affects the long dated ETH calls? Well, I guess that's more from an option perspective. We'll come back to that in a minute. Cover what your thoughts are here. Is that still some signal if we look at the perpetual market?
I think it's a continuation of what we discussed on Tuesday of the cash and carry trade. So you see people taking large spot positions, as we discussed earlier, like the Coinbase premium. Coinbase has been buying spot pretty consistently here over the past week or so. And it's just, there's a whole lot of spot accumulation going on, as we see with the whale wallets. And the way they hedge that is through perpetuals. So you see that show up in the open interest. So as price rises, it's natural to see open interest rise along with that, because they're hedging those positions in derivatives. And we see this here in the true open interest chart. Is the price has risen, true open interest is up again, right? It's up to nearly 2.72 billion. For reference, in early January, it was just below 2 billion. So nearly a $1 billion increase in just about a month here. And that, I think, in large part is due to the cash and carry trade, which is very bullish because people are buying spot and they're shorting the derivatives as opposed to selling spot and buying derivatives. So this is exactly the type of structure you would want to see for higher.
Higher for longer, higher for longer. People just didn't realize we were talking about Bitcoin and not rates. Okay, so let's just kind of summarize where we're at here. Stuck on Joker and Benjamin. We've got spot accumulation from the whales. We've got options preparing for more volatility. But of course, that volatility can definitely be to the upside. And then if we look at perpetuals, it's likely the cash and carry trade. And that's buying spot and selling shorts because it's cheap. It's good insurance. Everything is pointing to green acres from a Bitcoin perspective. And as Bitcoin goes, so does the rest of the market. Do want to point out that, Benjamin, you've talked about the potentially for liquidity event. So we have to keep that in mind and not rule that out. But at this point, be long until you're wrong. Okay, let's talk about the one factor that sits outside of the market that we always want to count on. And that is the Dixie. Looking at it today, it's trading at over $1.04. We've talked about that being the red line in the sand. And yet we haven't seen a pullback. JJ, what's going on?
It's interesting, isn't it? So what we remember a few weeks back, we discussed the possibility of the Fed unleashing the liquidity in the form of treasury assets becoming liquid. And we saw an announcement to that effect on Tuesday, shortly after our recording, where they announced that hedge funds could become, ruled dealers in treasuries.
Become dealers, yep.
Yeah. So that amounts to liquidity unlock in the long term. So it's basically, as far as I understand it, we need to get Ben back on the show to unpack it a bit more. Yeah. So just deal with my layman explanation for now.
Well, yeah, actually, for everyone who's on here today, definitely Tuesdays, we've got Ben Lilly on. He's the one who's going to be talking rates because that's what he dreams about at night. So definitely be able to show up there. And then, of course, we got Benjamin on every Thursday, and he's the one who's going to be doing altcoins and giving us a little bit more of that flavor. And, of course, we'll get to a little bit more that later in the show. But JJ, please continue with your simplified explanation.
As far as I understand it, that ruling that hedge funds can be classified as dealers and access the Fed's balance sheet in emergency situations, that basically provides a liquidity backstop to markets. So if DXY blows off, markets fall under stress. There's basically a supporting element there, in the same way that the reverse repo overnight facility used to, where they can basically take that liquidity from the Fed's balance sheet now that they're declared dealers and backstop markets a bit with it. And it seems like markets really like that news announcement. DXY did fall a bit. It's recovered today. But basically, you can pinpoint the time on the chart when that announcement came out, and Bitcoin's been moving up in a straight line. So I think that's another thing where you can exactly follow the number on the chart. You have to see kind of the, what's the word I'm looking for? There's other elements at play, right, that aren't obvious on the surface here. And that, I think that's what the market's reacting to, as well as these past flows.
And if you look at this exact point, is why if you switch to the BTC chart and look at the volume, this entire move up since 42K has been on declining volume, but it didn't matter because of the macro Fed announcement that has been going on. When the macro fundamental perspective shifts, you can see the declining volume over there, right? So it's even tiny buying is good enough because seller exhaustion is happening in one. And you are only seeing some type of passive selling, you're not finding an active selling, right? If you go to Binance order book, if you go to Coinbase order book, if you go to FDUSD pair, it's all very weak type of sells. Sure, there is now a gap in the bidding side as well, but it's really not bad when it comes to the order book side as well. And we're not seeing some huge slippages on any of the sides. Like we had a breakout, we had a pennant pattern. Now there is a breakout, but there's no slippage yet. There's no huge liquidations either.
Yeah, so it's been very orderly.
It's been very orderly. So yeah, sure. Now a few liquidation levels are forming up on long side, but I don't see that being chased. We probably get a little bit of a dip, but this could be actually a healthy run that continues. I mean, that should something else doesn't pop up, but yeah, I mean, there's no Pablo selling. There's no massive redemption in treasuries in Tether side or Circle side. It's all very peaceful. It's almost as if it's unbelievable if you think about it. It's so peaceful.
Institutional adoption. It's not like
there's so silent price move up. There's not much activity in various Discord groups or Telegram chats. There's very less engagement if you look about it in socials everywhere. So it's
we all have such a like PTSD from the typical wars that were fought in Bitcoin's order books, but it was just a peer versus peer Wild West system where it was just nonstop back and forth liquidations and crazy price action. But now it's exactly what Benjamin said. It's just kind of a more orderly, passive flow. It seems like things are dying down. That's extremely bullish. Like I think BlackRock wants to bring an element of stability to this product, and they have the means to control price in that manner, to where you don't see it as volatile as you used to, which is a good thing.
Well, I'm imagining JJ was a gunslinger in the Old West. So audience, let us know if you would like to see a NFT cowboy hat on JJ or even Benjamin. I know he may have something futuristic, but either way, I'd be curious if the audience is looking for some cowboy hats with this gnarly crowd. Okay, so the Dixie is still something we got to monitor, but this isn't it's over 104. It's lying in the sand. Everyone's got to be running for cover. The market's changing. We've got dynamics changing with the dealers. So we'll bring back Ben Lilly on Tuesday. Have a little bit more discussion there. Definitely something we need to continue to watch. But this is a great moment for us to pivot. Talk a little bit more about positioning on the ETH market. We got a lot of questions from the audience with where the market is going. Are you looking at beta plays? So I want to get into that. But before I do, if you haven't already, hit the like and subscribe button just to give the show a little bit of love, help with distribution. Obviously, I've said it before. If you want to, it's a great time to share this with others. We're trying to get this out to as many people as possible, grow the crowd of sophisticated traders that are going to make the biggest gains in this next market cycle. And again, if you're ready to start dipping your toe in options, CoinCall is the place to do it. It's where you can sell, you can trade your spot, you can trade your perps, and of course, options, which as JJ will explain in the video that's coming out in just 30 minutes, It's the best play to do it. Stop doing those dirty alts, start doing the better options. And we got a link in the show description. Hit that link and go sign up and start trading paper trades, small trades. So you're ready for those big fat pitches. Okay, I want to cover a couple of questions we have from the audience. And they're really related to, are you looking at beta plays for Ethereum? So we talked at the beginning of the show about the fact that the ETH ETF is a high probability event. JJ, you've already talked a little bit about playing that either from an ETH options perspective or even just buying ETH, the Grayscale Trust. But we have a couple of questions here coming in from the audience, really about beta plays. So let me find a few here. One of them was about, I believe, Link. They were looking at Link. Let me see if I can find this. Kind of go through here. Do you consider adding LDO to your ETH beta list? What about Sol when it's outage? Bunch of questions here, and it's almost getting a little confusing there. But I want to open this up a little bit more to you, Benjamin. If you're looking at beta play, and we're looking at Ethereum, is this a good time?
LDO is already in price discovery, so I wouldn't go about it on a perp play because it is a little bit way too volatile and a little like unpredictable manner. It's playing out like it's not following a lot of law of nature that I could look at. But LDO can be a buy and hold type of a play rather than trying to play futures on it. But when it comes to Link, Matic, I think it is going to have a run with its rebranding coming up, and it has a very good HTF chart. Higher time frame, it looks pretty good actually. And the way the alt market cap is looking at the total 3 is looking very good right now. And if today's close basically is green, then we have a breakout on the alt markets, which means like everything might go on another set of run for another month or so. Given that logic, the rotation I think is happening, to be honest, into ERC side, because even in our screeners and jumpers side, almost all the strongly bullish tokens today were all ERC oriented tokens, in the sense L2s of ETH and so on. Solana is still in a neutral to bullish zone, while if you take ENS, ID, ARB, Optimism, Link, Matic, all of that have jumped into the strongly bullish zone. And Matic, if you look at it in the past 3 months, it didn't do that big of a run. It didn't, I mean, none of the ETH tokens did that well, but ARB was still doing well. So if I would look at beta plays, I would still look at these tokens which are doing well in our screeners, such as Matic, Link, and those tokens.
Benjamin, I want to get specific on that. So you just covered, we've got the alternative L1s to Ethereum as a play. You've got the L2s in the DeFi space. Your screener, I think that you've shared before on the show, covers a lot of ground. How are you thinking about in terms of juicing the greatest amount of beta? Is it going down the L2? You just mentioned ERC tokens. That would imply, listen, look at the Ethereum ecosystem. It's going to get the biggest bump. Or is it possible that looking at alternative L1s would give you a juicier beta play? How are you thinking about that?
In general, alternative L1s are always a good beta play. That should be the default theory anyone should go with. The reason why I'm talking about the L2s of ETH is because I think ETH is going to have a run right now. So the L2s of ETH have a reason for a run up, or DeFi tokens, all these things have a reason for a run up. But in general, if you're looking for beta plays to BTC, it has to be alternative L1s. It should not be the sub ecosystem tokens of those L1s.
Okay. What else?
And the other thing that I think is going to pop up is compared to meme tokens. I think the ERC 404 tokens is popping up. It's starting to fall in our radar. So we might see a meme coin type of run on the ERC 404 token standard. It's something new. It is something expensive in gas fees actually. So there is a token called Pandora which got picked up and it did fantastically well, and it is trading somewhere around $1,000 or so on Uniswap, I think. So we might see that narrative pick up in the short term and dominate compared to Solana ecosystem tokens or any other ecosystem tokens. And that can be like the BRC20 ordinance run or the dog whiff hat type of a run that comes in the short term. And that can once again bring in flow back into the ETH and ERC20 ecosystem, and contribute towards a high ETH gas fees in the short term. Because for now, the network is pretty empty on the ETH side. It's pretty soft.
Very
But
soft.
if ERC 404 picks up, because there's a lot of degenerate discussions already starting to happen. So if that picks up, ERC 404 generates a lot more fees. So it means that more deflationary discussions will come in. So we have to keep an eye on those token listings. And that will be the degenerate play. That will be the meme coin type of play, right?
Well, let's actually pivot a little bit around that and think about how a portfolio could be constructed. I know we haven't really talked about this much on this show. It oftentimes sounds as if it's all my eggs are in this basket or then it's that basket. It's all in Ethereum, or I sell all that and then I move it over to further down the risk curve. How do you think someone can think to themselves and say, okay, if I've got my capital, let's just say it's $1,000. How much am I putting into Ethereum versus how much should I be putting into some of the L2s, some of these other plays that may squeeze out some additional gains, but at a higher risk? So is it like 50%? So if I get down specific, is it like 50% into Ethereum, 70% Ethereum, and the rest allocated down the risk curve?
Yeah, so this is a very good question. And today I was meeting a fund, and the fund manager asked me the similar question on how to go about it, because they come from a long only fund perspective and they wanted to understand the space and how to expand over here. So what I told him was like, try to buy as cheap as possible when it comes to BTC, ETH, Sol. And if you want to build up a long-term portfolio, focus on just holding them in spot. Go to private futures, use the UTA, do the perpetual trading, make the USDT in short term, move that USDT, and then go and do degenerate trades into the variety of ecosystems and meme coins and all those coins. Your core portfolio should not be about holding those ecosystem coins. Rather, you need to monetize out of your core portfolio, make those USD gains, and take that USDT gains and go and invest into these degenerate tokens. Why? Because your spot is anyway growing as long as the market is growing. So your core portfolio remains unaffected, while the yield you have generated out of the core portfolio using perpetuals, you take that yield and then go and dabble with all these potential possibilities. In this way, you are never worried about what happens to your core investments that you did, because in a bull market, that's growing anyways. So you forget about it. You take these yields that are coming out on top of those, core portfolios, then utilize that for degenerative trade. Which is why I keep telling people that it doesn't matter whether you are just a spot trader, but you are missing out on maximizing the advantage you have when you are collateralizing that spot, able to trade these perpetual futures, even if you're doing it at low leverage. If you're generating even minor yields, let's say you're generating even 2% yields a month, that amount is good enough for you to go and dabble, go and do airdrop farming, go and do bridging, all those things. You can then expand on. You can put in dog whiff hat, dog whiff cap, all of those things, and you won't worry about it. You will have much better risk appetite into those tokens. And that's how you get that 100x model workout, using those yields which you have generated on top of the spot accumulated tokens, which you are not going to touch. So even if you decide to take just BTC, ETH, and Sol and put 33% each, right? You put in a weighted index of equal, that is still going to averagely outperform just the BTC returns in the next 1 year.
Okay, so the sophisticated play is to accumulate a core position in a high quality asset, in this case Ethereum, and then look to use a platform such as CoinCall, which is a ref link right here in the description. Check it out, where you can make these kinds of plays on the perpetuals, and perhaps even on the options play with some of those gains, and perhaps looking at some of the alternative assets where you can get some additional gains.
CoinCall has altcoin options as well. Just
That's
to
right.
segue into that, which we'll be covering in future videos on how to play those. And I mean, if you really want to,
and it's cheap, and it's actually cheap. If
Yeah.
you're bullish on, I mean, even in December, we were discussing about this in one of the podcast calls, I think. If you're bullish on Link and it is on a 3-month consolidation, so we don't know when it is going to pop up. And it did pop up. I did not expect that it would pop up this month, but it did, jump up. The best play would continue to be is to put in a few couple of dollars into these low volatile situations, into those tokens, and just bite your teeth and just wait for a 30-day rolling, and it just pops up.
Yeah.
So you don't have to bother. In this way, you can just use the USDC to do that, right? So in CoinCall, that is the advantage. You can use your USDC or USDT to buy those tokens, the CoinCall option tokens. So there's an advantage.
Well, I think, Benjamin, as we start to move further into 2024, we have the halving coming up in April. We've got the ETH ETF coming out with a decision likely in May. We also have, and we don't have time to talk about today, but we have options on ETFs potentially getting approved in the first or second quarter of this year for BTC. That's going to be game changer for many of those who are US bound, who are looking for options. I know there's questions here about how to get into doing paper trades. We'll have to come back to that at another date because I think we're out of time today. But there's a lot more that we're going to get into in terms of how a sophisticated trader can look at their portfolio arrangement and looking at some of the strategies that Benjamin, you talked about today. But guys, I think with that, we're going to have to wrap up. As we do, the markets are looking rosy. We got Bitcoin above 45,000 over 24 hours, just under 4.6%. Ethereum at 2.8%. Guys, this is a good market. This is exciting time to be here. I want to thank everyone who joined us today. JJ, Benjamin, thanks for being in the studio. For all those out there, be sure to join us next Tuesday and Thursday. We're going to continue to break down the market, give you insights into how to trade and where to go next. And be sure to join us in I guess it's just over 15 minutes for the premiere of JJ's latest options video. He's going to be there to answer questions, so you're not going to want to miss this. Until next time, take some of that dry powder, figure out where you're going to put it. Marconi White signing off.